Hello students, welcome back. This is Ms. Mercado speaking. Today I'm going to go over Chapter 11 that deals with accounting for purchases and cash payments. This is Accounting 1303, Introduction to Accounting 1, and we are using the College Accounting 23rd Edition textbook. Okay, I might sound like a broken record, but I do want to remind all of you to please ensure to read each of the assigned chapters before attempting any of your assignments. Okay, the textbook does a great job at explaining, providing visuals of the content, providing step-by-step instructions on how to complete your journals, your ledgers, all of that stuff. So it is very important that you do read. Okay, I also uploaded PowerPoints into Blackboard. That way you can become familiar. You can use them as your reading to take notes. And when you log in into Cengage to complete your homework assignment, some of the problems have video tutorials included to help you and guide you as how to complete your assignments. Okay, if you have any questions, please do not hesitate to reach out to me. If you're sending me a message through Blackboard, make sure that you please include the problem number that you're having issues with, your specific question or questions, and your attempted solution so I can be able to provide guidance. I do not provide you with just simply the answer. I need to see what you're doing so I can guide you, point you in the right direction so you can get it done correctly. Okay? So, this is once again just a short overview of some of the key information in the chapter, and I am going to go over how to complete one specific problem from this chapter that you will be seeing in your homework and you will eventually be seeing in your test. Okay, so it is important. Okay, so anything that I cover here, if I'm taking the time to cover it, is because you are going to be seeing it in future assignments. Okay, so let's get started with some key points from this chapter. Okay, so the first learning objective for this chapter is to describe merchandise purchases transactions. Okay, and the information that they provide to you in the textbook is for merchandising businesses, purchases refers to merchandise acquired for resale. Okay, so we are buying stuff. Okay, and we're going to be selling it. Okay, so some of the major documents used in the purchasing process are the purchase requisition, the purchase order, receiving report, and the purchase invoice. Okay, so we're going to quickly go over some of these documents, but it's very important that we are aware and we understand when we read a transaction in this particular case, because once you go out there into the workforce, you're not going to be told what it is. You have to identify it based on the different documents. Okay, so if I am a merchandising business, well, I can't really sell merchandise unless I've purchased it from someone, right, or somewhere. So this chapter is going to deal with purchases and purchases returns, purchases discounts. Okay, so everything related to purchases. Okay, here we have an example of a purchase requisition. Okay, it's a document. It's an internal document. Basically, it's an internal form sent to the purchasing department to request the purchase of merchandise or other property. So what usually happens in a organization or in a business is we have a centralized area where all of the purchases are made. Okay, and that is for security purpose or for internal control purposes. We want to make sure that we have individuals that know who we are able and capable to make business with. We should only be buying from approved vendors. We have the approval to make those purchases, so on and so forth. So we want to segregate our responsibilities. You know, if a department needs something, they're going to go to purchasing. They're going to let them know what they need. Purchases will review the information, find the best deal, shop around, find the best deal, and then make the purchase. Okay, so what the purchase requisition does, it's basically an internal document. So I'm working in a specific department or area and I'm needing some kind of item. Okay, so I fill out the purchase requisition form and I explain there, okay, what is it that I need, the quantity that I need, and it's a description of the item. Okay, if you have an item number, include the item number there, whatever the case might be, and who you're wanting preferably to purchase this from. Okay, that does not mean that it's going to get purchased from a specific vendor, because like I said, the job of the purchasing department is not only to place orders, but to find the best deal. Okay, so you tell them this is what I need. They're going to go out there and they're going to get it for you. And they are looking at the best interest of the organization, so they're going to try to go for the best product at the best price. Okay, so this is what a purchase requisition looks like. So here we have the date that it was issued. Okay, the date that they are required to receive these items. Okay, so I'm placing my order on February the 24th. I need it by March the 12th. Okay, and this is the department for parts. This is their department, and it's gonna be delivered. The goods are gonna be delivered to Sam. That's who they should be addressed to Sam Tangari. Okay, it's saying here to order from Quality Bike Products. Okay, and these are the parts or the goods that they're requesting. In this case, there's some kind of parts. Okay, I guess they're assembling something and they're needing a lever, a span PG1070, and I don't know, a corkscrew right here. Okay, so this is what's filled out by the department that is requesting the goods. Okay, that is sent over to the purchasing department. The purchasing department fills in the bottom part of the form. Okay, so here is the person that is actually placing the order. Emily Green is placing the order. The order was approved by Dan Hughes, okay, and they've assigned a purchase order number 312. And we're gonna look. This is a good way to tie your purchase requisition to a purchase order. So a purchase requisition is an internal document. A purchase order is an actual document that's sent out to the vendor. Okay, so that way I can track it. Okay, this is the date it was the order was placed. So if you see the purchase requisition was submitted on the 24th, the order was not placed till the 26th, 2 days later. Okay, and it was issued to Quality Bike Products. Okay, so they went ahead and this is where it's going to be issued to. These are the people they're going to be sending the parts to. Okay, so look at here, purchase order 312. So this was the document that said, okay, I need several parts. These are the parts that I need. The purchasing department went out there. They found the best deal. They identified the Quality Bike Products was the one that they were going to order from, and they went ahead and they placed purchase order number 312. Now, if we look down here, this is the purchase order 312. So this document ties to this document up here. Okay. So why am I placing this purchase order? Well, I'm placing this purchase order because Sam Tangari needed some parts. Okay. So this is the actual order that was placed. This is the date it was placed on the 26th. Okay, it's going to get shipped via UPS ground. It has to be delivered before March the 12th. Okay, and then these are the quantities, the description, the price for each of the items, and the cost. Okay, and the approval signature. So Dan is, I guess, a supervisor or something of that sort. He has authorizing responsibilities. So Dan goes ahead and signs the purchase order. Okay. Now the purchasing department reviews and approves the purchase requisition, which is the one we have up here, and prepares the purchase order. So this form is completed by the purchasing department. Okay. So a purchase order is written down to buy goods from a specific vendor or supplier. So here I'm actually sending out this purchase order to Quality Bike Products and letting them know, hey, you need to send me 3 of this, 3 of that, and 2 of that. Okay, and this is the total, $760. Okay, that I'm going to be paying you after you deliver me the goods or whatever the case might be. Okay, so the order is placed here for the purchase order. The form is sent out to Quality Bikes. Quality Bikes prepares the order and ships it over to us, okay, to Sunflower Cycle. Okay, then we receive a purchase invoice. Okay, so if you see here, the logo is Sunflower Cycle. This is the company placing the order, Sunflower Cycle. Quality Bike Products, right down here, is the company fulfilling the order. Okay, so now that they've fulfilled the order, they've gotten all of the parts that you needed, they put them in a box. You're going to go ahead and inside that box, you're going to put in an invoice, okay? Because they're letting you know, here's your parts, and you owe me this much money. So make sure you pay me, okay? So, this is the purchase invoice. It has the date it was generated, the terms, which means if here they're giving you a discount. If you pay me within 10 days, I'm going to give you a 2% discount. If not, everything is due within 30 days. It was shipped by truck, and the salesperson was Halfin. Okay, they've given it an invoice number, their order number and our order number. So our order number will be our purchase order number right here, 312. Okay. And it outlines all of the items that were put in the box and shipped over to Sunflower Cycle. Now, when the merchandise is actually received by Sunflower Cycle, okay, a receiving report must be prepared. Okay. Now, a receiving report can be a separate form. I've seen it where they create an actual receiving report, or there's other companies that just stamped the purchase invoice. If you see here, we have a stamp, and then here they include the information of when it was received. Okay, so on the invoice, I've already marked, you know what, this is what I received, who received it, were the items in good condition? Yes, they were. The invoice number, all of the important information is included within the purchase invoice. So you can either create a separate form to balance or to confirm that whatever was requested was shipped and included in the box, or you can just incorporate that information into an existing document that you have, which in many cases it's going to be the invoice. So this is basically the actual invoice, and then this can be part of the receiving report. Okay, but don't get confused. In some cases, like I might say, you might get a separate form. In others, they might include the information within the actual existing document. Now, in this textbook, or I'm sorry, in this chapter, we are being introduced to new accounts. Okay, so there's 4 new accounts that are introduced. We have purchases, returns and allowances, purchases, discounts, and freighting. Okay, so my purchases account is used to record the cost of the merchandise purchase. Okay, so if I buy merchandise, if I buy parts, if I buy whatever it is that I'm buying, so I can be able to sell my goods, that goes under purchases. Now, I have got my accounting equation down here. Anytime you make a purchase, you are going to debit your purchases account. Okay, that is the normal balance of your account. Okay, so your purchases, you're gonna debit it. So anytime you have to record the cost of the merchandise. This is how much you had to spend on whatever is it that you're buying, because it's your spending. It falls under the expense category. It's normal balance. It's a debit. Now we have purchases, returns, and allowances. Now, purchases, returns, and allowances is a contra cost or a contra purchases account, which has a credit balance and is deducted from the related cost account. Now, let's say, for example, you purchase something. Let's say, for example, you purchase a tire. Okay? So you're into the business of manufacturing go-karts, and you bought 4 tires. You open the box with the tires, and 2 of them are flat. The rim is all damaged. It's not in good condition. Okay? So you're going to have to return 2 of the 4 tires because they're in horrible condition. In the process of them being shipped, they got damaged. I don't want damaged tires. Okay? So, anytime you have a purchases return, then you're going to go ahead. We have an account for purchases, returns, and allowance because it is a contra cost. What we have here, contra cost, or if you want to call it a contra purchases account, it's going to be the opposite. So my purchases get debit, my purchases, returns, and allowances get credited. Purchases discounts. Purchases discounts is a contra purchase account, and it's used to record cash discounts allowed on purchases. Okay? So what happens here is if you pay within a predetermined period, if you pay me within 10 days, I'll give you a 2% discount. That has also a credit balance. And last but not least, we have our freighting. Freighting is basically an adjunct purchases account, and it is used to record transportation charges on the merchandise purchases. Okay? So transportation costs are part of the total cost of the merchandise. So they must be added to the net purchases on the income statement to compute cost of goods purchased. So if you're purchasing large quantities of whatever good is it that you're purchasing, there's shipping costs involved. Shipping is basically freight, okay? So that freight needs to be added to the cost of the goods, because you know what? Without that shipping, I wouldn't have my goods here. So that is part of the overall purchases balance. Okay, so we must add that to our income statement when we're computing our cost of goods purchased. So the normal balance of a freighted, this is an expense account, that will be a debit balance. Okay. When we're calculating our cost of goods sold, we do so by getting our beginning inventory. Now, let's say for example you're what can we be selling that we have here locally? Let's see. Let's say we are in the business of fixing air conditioners. That's a big one down here in the valley because it's always so hot, okay? So let's say we're in the business of fixing AC units, okay? Well, what do these people need? They need a lot of parts. They're constantly having to replace this, replace pipes, replacing different components of the AC unit. Okay, they don't want to buy all of this stuff and keep it in their warehouse, because depending on the customer that they go service, there's different AC units. Maybe they need specific parts. So we might have some items in our inventory, a low amount, the most common that we use. That way, if we have some kind of service, we're able to provide that service immediately to our customer. If it's a really expensive part that we don't use on a daily basis, then that one we'll order it as on a need basis. But there's some items that we need. They need Freon, they need all of that good stuff. You'll buy all that up front. So you're always going to have some kind of beginning inventory. Okay, anything that you've purchased, you're going to have them in a little warehouse or a little shed or whatever is it that you have them. Okay, so you're going to have your beginning inventory. Okay, you're going to add any purchases that you made during that specific period. What did I buy during this month? Okay, so you're going to add your purchases. Okay, how much did they charge me to ship that over? Did they have to, maybe I placed a huge order for 10-ton units, and then a special truck had to deliver them, whatever the case might be. Any freight cost needs to be added, okay? And then I subtract my ending inventory, okay? And that's going to give you the cost of goods sold, which represents the amount of goods you actually sold to your customer. If you notice, I've had my AC unit serviced quite a bit until I replaced it this last year. But every time that the gentleman would come and service my AC unit, on the top he would put labor cost. This is what I'm charging you an hour to fix your AC. And then on the bottom he would put any parts that he had to replace, if he had to add any Freon, the cost of the Freon, so on and so forth. So he would itemize the actual goods and the actual service component of it, and then he would add them all together. In this case, I'm only interested in items that I've purchased. Okay, so whatever you've purchased, you're going to get your beginning inventory, add your purchases, add your freight, and then subtract your ending inventory. And that's going to give you your cost of goods sold. Your gross profit, net sales minus your cost of goods sold. Okay, that's how you get your sales. So let's say, for example, and I know a lot of friends of mine or a lot of acquaintances are doing this. They're buying either makeup, they're buying jewelry, they're buying clothes from China, Japan, all of those places. Okay, they buy low, they resell high. Okay, so your gross profit is the amount of your sales minus the cost of goods sold. Okay, so on your cost of goods sold, you have to identify how much did it cost, whatever I'm selling cost me. Okay, once you figure that out, you're going to get your sales. How much did I sell it for minus how much it cost me. Okay, so let's say, for example, I have a palette of eyeshadows, and I'm saying this because I buy a lot of makeup. So let's say I buy a palette of eyeshadow, okay, from a friend of mine. Okay, so my friend, she bought this palette for $10. She sells it for $15. Okay, so let's put here the purchase price. My friend here, she purchases the palette for $10, and then she sells it for $15. So she's making a gross profit of $5 per pallet. Okay, that is what most businesses do. They buy it. We have a purchase price. Then we have a sales price. How much are we selling it for? And the difference between the two is your profit. Okay. Now in here in your purchase price, let's say for example, she paid $10 of goods. Let me do equals. Let's say she bought it for $10 and they cost her. They charge $1 for freight. Okay. So that means that she's spending $11 per item, and she's selling it for $15. So if you have any cost associated with it being shipped to you, transported to you, you must include that kind of like under your cost of goods sold. Okay. Yeah, I bought it for $10, but it cost me $1 for it to get here. So I actually paid $11 for it. So I'm selling it for $15. So then that means that my profit will go down. I'm sorry. My profit will go down to $4. Okay. So this is the overview of the particular chapter that we're going to be covering. All of the information is provided in the chapter, the T accounts, whether you need to debit or credit, all of that good stuff. Okay. Now I'm going to jump into the exercise that I'm going to be covering. It's exercise 11.7, and this particular exercise deals with journalizing cash payment transactions. Okay. So before I get started, let me go ahead and print it out. I'm going to print it out because that way I don't have to be flipping back and forth. Okay. So I'm printing that out so I can go ahead and record these transactions. So the instructions say, enter the following cash payment transactions in a general journal. Okay. And then we have 4 transactions. Okay. So the first transaction, September the 5th. You issued check number 318 to Whittle Corporation for merchandise purchase on August the 28th, $5,000, terms 210, net 30. Payment is made within the discount period. Okay. So what's happening here? We made a purchase of $5,000 from Whittle Corporation. Okay. And we agreed to pay them at a later point in time. Well, now we are in September. Okay, we made this purchase on August the 28th. We are now September the 5th, and we're going to submit our payment. Okay, so we're paying the $5,000 that we owe. Now, the key here is that we're paying within the discount period. So they told us, if you pay within 10 days, I'm going to give you a 2% discount. Okay. So we are being asked to record this entry. Okay. So I've got my journal here. So this is happening September the 5th. Okay, let me put my date here. So I'm going to have the date, the description, my post reference, my debit, and my credit. Okie dokie. Okay, so let's start off with the first transaction. This is happening on September the 5th. Okay, so what does it say that we're doing? It says that we are paying Whittle Corporation the $5,000 that we owe them, and we are paying within the discount period. Okay, and the discount period was 2% if we pay within 10 days. Okay, so what is the first thing that we have to do? Okay, so what happened is we purchased something on account. When we bought something on account, we had an accounts payable set up in our books. Okay, so we have to clear that accounts payable because we no longer owe the money. Okay, so when we purchase on account, we went ahead, and let me do a little, here I go with my little T accounts, but it helps me visualize. Okay. So this is gonna be my accounts payable. Okay, and I'm gonna abbreviate accounts payable for Whittle Company. Okay. And this is my debit, and this is my credit. Okay. So if we go back, it says here that we purchased $5,000 on account. Okay. So we bought some merchandise on account. So what happens to my accounts payable? Okay. Well, I bought an account, so my accounts payable is going to go up. I owe $5,000. Okay. And this is happening on August 28th. Okay. August 28th. Okay. So in my books, I have accounts payable for $5,000. I owe Whittle Company $5,000. Well, now we're September the 5th, and I'm paying what I owe. Okay. So if I need to clear my payable, what am I going to have to do? Well, I'm going to have to debit my account. Okay. And that way, my balance is going to now be 0. Okay. I have a 0 balance. Okay. So my payment is happening on September the 5th. Okay. So this is when I purchased it. This is when I made my payment. Now I have a 0 balance. So I need to record this debit. Okay. So I'm going to go ahead and I'm going to do accounts payable. And we have to put the name of the company, Whittle Corp. Okay. Now, what amount are you paying Whittle Corp? Okay. That is very important, and this is where a lot of students get confused. It says here that we're going to pay $5,000, what we owe, but we are getting a discount because we're paying within the discount period. Okay. So, a lot of students get confused and they want to clear the accounts payable for a lesser amount. The accounts payable will always be cleared for the full amount of $5,000. Okay? Now, when you actually submit payment, cash, you're not going to pay $5,000. You're going to pay $5,000 minus the discount. Okay? So now I'm going to calculate down here my discount. Okay? So, I owed $5,000. I am getting a 2% discount. So let me get my calculator out because I cannot do the math in my head. 5,000 times 2%. My discount is going to be $100. Okay? $100. Okay? So what does that mean? How much cash am I going to pay? Well, I owed $5,000. Okay? I owed $5,000 minus the discount of $100. Okay? So I'm only going to pay $4,900. Okay? So if you see I have a debit for $5,000, a credit for $4,900. I'm not in balance. Well, I'm not in balance because I need to record the discount. Okay? So we have an account called Purchases Discounts. Purchases Discounts. And that was the $5,000 times the 2%. Okay? And the discount is $100. What we calculated down here. Okay? So now my debits equal my credits. Okay? It always has to balance. Okay? So I'm clearing my payable for the full amount of $5,000, and I'm only submitting cash payment of $4,900. I'm saving $100 because of that discount that was applied. Okay? Because I paid within the discount period. Okay? And here I'm going to put here the check number that I'm using to pay. Check number 318. Okay. Let me save my work. The next thing we have another check issue. Check 319 to Martin Company for merchandise purchase on September the 2nd, $8,500, terms 110, net 30. Now here it gets a little bit more challenging because we had a credit memo. So that means that a credit memo has been received on September 8th from Martin Company for merchandise return. So we bought $8,500, we returned $400 worth of merchandise, and we made our payment within the discount period. Now the discount in this one is 1%, okay? And we did pay within the discount period. This is happening as of September the 12th, okay? So, once again, let me copy this over down here. Okay. So once again, I'm going to have my accounts payable, but this time it's for Martin Company, okay? Okay. And what happened here is I bought how much? I bought $8,500, okay? So I bought $8,500. So when I bought it, I owed Martin $8,500, okay? But then what happened? Okay, there was a return. So this is when I purchased it. I purchased it on September the 2nd, okay? 9/2, okay? Okay. Then what happened? And then on September the 8th, I returned $400. So when I returned $400, I debited the account. This happened on September the 8th, okay? This is my return on September the 8th. This is my return. So how much money do I owe right now? Well, I owe $8,100. This is how much I owe. This is my balance, okay? So this is my purchase. This is my return. This is how much I owe right now. And this is how much I'm going to pay, okay? So I need to clear $8,100 from my accounts payable because I'm submitting payments. So I'm going to go ahead and I'm going to debit my accounts payable for Martin Company for the $8,100. Okay. Then we need to figure out how much cash am I going to pay. Okay. So I need to figure out my discounts so I can figure out how much cash I'm going to pay. Okay. So my discount, I can't type. Here you go. My discount is going to be the $8,100 times 1%. Okay, let me get my calculator out. 8,100 times 1%. That means I'm going to get a discount of $81. Okay, so that means that I'm going to pay cash. I owed $8,100 minus the discount of $81. So that means I am going to pay cash of 8,100 minus 81, 8,019. Okay. And then I'm going to record my purchases discount, which was your 8,100 times 1%. Okay. Very good. Third one. Oh, I'm sorry, I forgot my description, and we are paying with check number 319. Okay. Check number 319. Okay. Next transaction, you issue check number 320 to Cloud Systems for merchandise purchase on August the 20th. 6,100, terms net 30. So in this particular transaction, we are not getting a discount. We just have to pay the amount that we owe, the 6,100, within 30 days. So this one's very straightforward. We're just going to make a payment for the full amount. This is happening on 9/19, September the 19th. Okay. So what am I doing? I'm making a payment. So I'm going to clear my accounts payable for Cloud Systems. And how am I clearing that? Well, I'm making a payment. Anytime you make a payment, your cash gets affected. And the amount that I'm paying is the full amount of $6,100. There is no discounts involved here. Okay? We're just paying the full amount of the original purchase we had made. Last transaction, you issue check number 321 to Dynamic Data for merchandise purchase on September the 17th of $7,000, terms 210, net 30. And the payment is once again made within the discount period. Okay, so here what happened. Okay, so once again, we are going to, on September the 27th, okay, I'm going to have my accounts payable be debited for dynamic data. Okay, and I'm not doing the whole T accounts again because you should already gotten the logistics of it with the 2 examples that I've provided. Okay, so the amount that I owed here was $7,000. Okay, I am paying cash. How much cash am I paying? Well, I need to figure out the discount. Okay, so for this one, I'm going to go ahead and I'm going to do a discount. The amount is $7,000 and the discount is 2%. Okay, 2%. So let me get my calculator out. 7,000 times 2%. That's $140 discount that I'm getting because I'm paying within the discount term. Okay, so I am saving $140. So I owed $7,000 minus the discount of $140. So that means I am going to pay $7,000 minus $140. I am going to pay $6,860. Okay, and then I can just plug in my purchase discount, which was the $7,000 times the 2%. Okay, and that was $140. I'm sorry, I forgot to put here the check number. This is check number 320. This is check number 321. Okay, so those are my entries. I just like to make sure at the very end that my debits equal my credits. So I'm just going to add my debit column and I'm going to add my credit column. And let me see. 4,900, 100, 80, 6,100. Okay, these have to go like this. Oh, am I missing something? 4,900, 100. Oh, right here. I forgot my discount right here of $81. I had it right here calculated and I forgot to enter it. You see? That's why it's very important that we always make sure that we balance. So I have my debits and my credits and they're equal. I know I posted everything. You see? Right now I made a mistake. I calculated it, the discount right here of 81, but I forgot to enter it into my transaction. So my debits were not balancing, but I figured it out. Good job. Okay, so this is the end of the exercise 11.7. Okay, I've given you an overview of how to calculate discounts, how to go ahead and make that payment. I highly encourage that you read the chapter. Please, if you have any questions, do not hesitate to reach out to me. Just like I said earlier, just send me the problem number because sometimes I don't know what problem you're referring to. Send me your problem number, send me your questions and your attempted solution, and I will for sure get back to you. Okay? That is it for today. Until next time.